On guys, so today I wanted to do a video on common shares outstanding and float. What are they and how do I use them? So common shares is pretty simple. Basically, when you have a company and you are looking to, even if you aren't looking to split a company, but every company has shares, right? So if I open up my own business, I might have one share of stock and I might be the one owner of that stock, okay, of that company. Now you can split it. You can have different amounts. So we have 100 shares of our new business. We can split it up into, maybe I own 50% of the business and I own 50 shares. You might own 10% of the business and own 10 shares, and then we might have someone else that owns 40% of the business and they own 40 shares, right? So it's basically how we split up the company. For the stock ANY, like I always say, I like to check the SEC filings. First thing I do, I like look at the date and then the amount of shares outstanding. So ANY has almost 2 million shares outstanding. This is important to me because the lower the amount of shares outstanding, if that company can generate demand for the stock, the price could go way up very quickly. So if ANY had 100 million shares outstanding, that means every time the stock moves $1 in price, the company's value just went up by 100 million. Whereas ANY only has 2 million shares outstanding, so a $1 move is only a $2 million increase in value of the company. Okay, so if a company has news that they just signed a $10 million deal with, Disney or something, and they're gonna get $10 million in revenue, for a stock like ANY, that might be a big contract because it's a smaller company. This is a $10 million company. So that that news could be really big for this company because the company is small, right? If you had 100 million shares outstanding and this stock is trading at $5, that means we're talking about a $500 million company. A $10 million deal might be big, might be small. You have to look deeper into it, but this is just an example. Okay. So I'm shorting a lot of, micro cap stocks, and a lot of them, will have these big moves. And if they have a lot of shares outstanding and the news is kind of irrelevant and the stock gains 20, 30, 40 million dollars in market value, then I say to myself, this is completely unjust. Maybe this is a good time to short. Now, I also use some other indicators. Uh, I can't just base all of my trades on fundamentals because if you do that, you are asking to get hurt. Just like if you trade purely on technicals, you're asking to get hurt. I think you need a good balance of both. So I use common shares outstanding. The lower the common shares outstanding, the easier I know it is for the company to have a move where it goes. Let me pull up the chart of ANY. Let's see here. Let's look at the 4-day chart. I know this just had a really big move, so I'm going to use it. Oh, it's up here. So, ANY, right? It has a really small float, and it just went from $2.50 to $7. Okay, so that is a big percent gain, but in overall dollar change of the company, it's not mm, crazy. Crazy, yes, for a smaller company, but in the gist of things, you have companies on the stock market that, like Apple, Amazon, these are like 800, 900 billion dollar companies. So, you have to know how to figure out how do they figure out how big Apple is? They take the price that the stock is trading at and they multiply it by the shares outstanding. And that's the 100% value of the company. and then they put a dollar on it. That whatever that equals is the value of the company. So ANY has just under 2 million shares, so I'm just going to round it to 2 million, and it went from $7 from $2 to 250 to $7 basically. So that's a $4.50 increase in price. Now you multiply that by 2 million shares, that's only a $9 million change in market value of this company. Of Okay, so this company's market cap when it was at $7 was only 14 million, which is nothing. There's a lot of people out there that can go on and just be like, "Oh, 14 million, I could buy this company technically." Uh, so that's why it matters. Now, float is different. Float is the amount of shares minus the amount float is the amount of shares that are freely traded on the market. So that means if I'm an owner of ANY and let's just say I own 50,000 shares, okay, and I'm an insider, those are not freely traded because then I'd have to file a Form 4 or something. If I'm a large holder, if I'm a 10% holder, those are not freely traded shares. So you subtract those out, whatever they may be, and that is your float, and that's the amount of shares that are publicly or freely traded between me, you, and the other retailer. So on small caps, it really makes a difference if this company has 2 million shares outstanding, but only a million are freely traded, and this trades 10 million shares in a day, then we know that the stock was traveling up on air or down, whatever it may be. And that it's called float rotation, and that's a video that I'll have to dedicate to itself to fully explain. But as we see with ANY, like when I started the live stream this morning, I said, "Ooh, ANY, unique situation. It has SSR, it has low float, and it has shares available to short." And I said, I know this setup. I don't know the odds of the setup. I don't know. I haven't tracked it long enough where I know how often this works, how often it doesn't. But this is like the goal of my chat is I want to build a community where we all can start tracking all of these moves because this is a 40% move now where that's a lot of money. You make 40%. If I had 1,000 shares on this at $4.35, I'm, I mean, that's almost $2 a share now. That's almost $2,000. So these are the types of moves that we really want, and this is a short squeeze. This is going to continue to squeeze as well. If the volume keeps up, if demand keeps going higher. Now let's take a look and see. Yeah, like this is squeezing. Anyone that chased this short is now getting squeezed out. If this breaks 7, watch out. Uh, so that's basically float and shares outstanding. I always put it on my watch list now. I'm going to start putting it because it's really important. So hopefully this video helps you guys a little bit. It's a little bit messy, but there's some good info in here. This short squeeze is because this is a small float stock, low float, and it's getting demand. It has volume. It is getting attention. It's got momentum now. So if you had 100 million shares and this thing was only trading, 2 million shares in the day, it's not going to have a big move. Stocks that have 100 million shares usually don't go up a couple 100% in a day. Okay? So that's why I always put it on there, and that's how I use it. And I have rules for myself. I wouldn't short ANY because I don't like to short stocks with under 2 million shares outstanding. I don't even like to short stocks with 3 million shares outstanding because I know if it trades 20 million shares, the move is going to be ridiculous. Okay? So hopefully this video helps. Always check shares outstanding, always check the float. Two very important things. Float can be a little bit tricky to calculate, but I will make a video on how to calculate the float If you use websites like Yahoo Finance, Finviz, they're not always right. They're actually rarely right. They're close, but usually you want a better idea, a more accurate picture. I'll try to make a video on that. So stay tuned. If you guys like this video, give me a thumbs up. Subscribe to my channel if you want to learn more about, the ins and outs of stocks and trading. I'll be posting a lot here soon. So definitely follow along, and hopefully this video helps. I'm out of here. Peace.